Hello guys, welcome to the Train Parrot. The correction on Bitcoin is starting to accelerate. We had initially a move to 89.5, but we saw a rejection and we are 8% down from there into 83k as I'm recording in this video. I have made the decision tonight to not do the short update. There is no way I can squeeze everything I have to tell you. I'm gonna cover not just Bitcoin, but actually I need to turn my face into general markets. What the hell is going on with the Nasdaq, the Russell 2000, the volatility index, and all of them might be knocking on our door very soon. So before that happens and before we get a cold shower of something larger incoming, in which case the 4-hour, the daily, and those signals might become useless. So I have made the decision tonight to not do the short update and to do a little bit of a deep dive into that direction. What's going on? I'll cover as well the Bitcoin dominance and other things, of course, that can affect the altcoin market too. It will be much easier for me just to do the short update, look at the 4-hour, the liquidation pools, and say goodnight, and that's it. But I had a quick look at all the charts, and I feel, guys, that you cannot miss this. It is my responsibility tonight to share it with you. Guys, if you like this type of content, make sure that you're subscribed to the channel. Hit the notification bell to get notified every time I put out one of these videos. Today, I put a special video because too many people are asking me, where do you get access to all these charts that you show in every single video? So I decided to go to my website, to the section charts, basically the tradingparrot.com/charts, and go one by one through all of them. There are over 70 different charts, each one of them more important than the other one. And in a video in a half an hour, I tried to squeeze everything I could so you understand what are they for in a single phrase and what do you need to get each individual chart and sometimes each part of the chart. Because some charts, like for example this one, I use different indicators. So I wanted to put that video as a summary. If you're curious or if you just want to get one of all these things, I hope you're gonna find the answers there. Let's start with this. Liquidity is increasing. I can see that there is an increase in the global liquidity index. I can see that there is a liquidity increase in crypto. It's very mild, but there is an increase. The problem is that the liquidity is coming in at the moment that we're having the crash. Liquidity takes time to have an effect. Bitcoin will eventually mirror what the liquidity is doing, but in average, it tends to do it the fastest 1 month, and sometimes it can take up to 3 months for Bitcoin to really start following the liquidity. So my bias continues to be bullish from the point of view of liquidity. That's independent from what I'm gonna tell you about this potential extremely bearish scenario coming from general markets, which hasn't been confirmed, but we are gonna look into it for your awareness. One thing that is good as well is that the interest on Bitcoin has increased from a bottom of around 18. This is still not a breakout, as you can see. This is just one lower high. So if we really want to turn things over, this needs to actually break out from 30 and continue, possibly even into 50, to really convince me that there is a hope that retail can come in with that additional liquidity and do some changes. So it is positive, but it's very mild and quite an early signal to really think that that can make a change. We're almost 16% down in February at the time I'm recording this video. We still do not have a buy signal from hash ribbons. One thing that I'm noting in here that it has bounced from the lows in here and is pointing upwards. So we can even put on the hash rate a line like this and say or speculate that once the hash rate comes out of this range and starts taking the highs, we could be seeing a buy signal. Something similar to what we saw with the hash rate in here, that after it put a very low value in here, causing that the moving average created the bearish cross that calls out for the capitulation signal. Eventually, the hash rate comes back up to the highs, and with the price action moving up, it contributes to get that buy signal that we all want to trigger. This is one of the most accurate signals that you can have in all crypto. That's why we want it. But for as long as we don't get that buy signal and the price is coming down, the miners are still in stress. I don't want to scare you, but if we go back in time, for example, in here, you get the capitulation here at the first first stop in 2021, and the buy signal only triggers once we recover from 28 into around 45k. That's why it will be ideal to get that buy signal as soon as possible and not after a full capitulation of the price as well. All right, let's go into the microscopic look at what's going on with the price. Earlier today, when I was seeing this price action in here, and the price went from 86 to 89.3 actually, and it saw a rejection at those levels that we were talking in the video in the morning, I saw this candle getting bought up from 85.388, putting a high at 87.6. To me, that was a little bit of hopium, I had to admit. I got excited with that candle, and the reason is because at the close of that candle, which is higher, we started producing this candle that comes back down. But at the moment we took 85, the RSI was still in a very pronounced bullish divergence on the 4 hour, and that occurring coming out from a 16. Unfortunately, this sold off very aggressively again. So what can we say? That the close of this candle on the 4 hour is at 18, which is higher than the close of 17 of the previous pivot. So if we connect these two pivots, it looks something like this. But I'm abusing here the name of pivot because the current 4 hour candle is pointing down. That means that it's not yet a pivot. To become a pivot, the current 4 hour candle needs to go up. Not necessarily that much, but it needs to go up, and then the next one possibly as well go up to really define a W pattern in there with a higher low on the RSI but not in the price, and that gives you this low in here of 83.8. So in the next 3 hours, if we get bought up and we push higher in here, helping the RSI to put a pivot, we could form a double bottom formation. I have to say, this is very risky. The entry of my sell at 87.1 was with low volume, and it was proportional to the risk I think it was to enter so early. I decided to enter before even the 4 hour broke out. Typically, I chicken out and I wait for that, but I thought that there were so many signals on the 1 hour and 4 hour that could give us that early entry that we can brag about later was going to be the best idea ever. And I still stand on my feet and defend the idea of having entered there, because even looking at the data now, I think I follow my rules. If I didn't do it and the price bounces off, then I will be slapping myself for the whole week for not following the rules. And that's the point of being a disciplined trader. You have to have a plan and stick to it. Now, the next step in the plan is to look for where to average down my position. At this point, nope, I'm too close to my previous entry. We have to really go pretty much to 80 to 78 for me to really consider to add from here. So the analysis I'm doing in here is to speculate whether we could have that 4 hour breakout in here and hopefully a rally into top of the range. Reasons for that, let me tell you. CME gaps that we formed in the past days with the aggressive moves overnight while the Chicago exchange was off. So I have reasons still to believe that this can break out. So that's why I'm trying to scratch into the 4 hour time frame to see what could make it happen really. On the daily, you can see that the global support has been broken pretty drastically, very similar to what we did on 15th of August in 2023. We haven't done anything like this in over a year and a half. We did it after the first rally into the top of the RSI daily. We have had 2, 3, and 4, and all of that was after this event there. So there's been a lot of water passing under the bridge before we get kind of the same setup. And as I say multiple times, Bitcoin on higher time frames, on the weekly time frame, when it has a technical target, it tends to disappoint traders. I think now that is extremely likely that it's gonna please all the shorts because it's very close to get to that technical target of 80.3. Not saying it needs to stop there. Remember that right below there is a CME gap quite large. Neither I'm saying that we are gonna fulfill it 100% for sure, but the shorts have never had more chances to actually fulfill it at this point. So many things are going on. Look at this chart. This is incredible. After we lost this line of support of the bull market, that we talk literally the whole bull market. We talk about this line. I call it the boss of the weekly. Now we are testing the second layer. So we already lost this level once and we left a pivot at 44. And right now we are testing 48, which is really unprecedented after forming a channel like this, coming all the way from 61 to 47. These kind of things happen, but at this time in the cycle, it is unprecedented, at least from the point of view of seasonality. If you look at February's from 2013, maybe before 2013 there was another one like this, but pretty much in 10 years, this is the worst February. The worst February in 10 years. We tend to do an average of plus 13 in February. Now we're doing minus 16, which makes me believe that there's something external to crypto that we need to look in those charts later when we look at Nasdaq, the Russell, S&P, VIX, gold, and dollar. I think it was in the morning video that I mentioned that all this area in here that you can see that there is some sort of price action going on in there. There is some volume as well in the profile. It's definitely low volume, but much more than the volume that you have in the drop in this area. You can see that in this area as well, there are fair value gaps. Fair value gaps are defined as areas of the candle that don't overlap with the immediate candles next to them. And for example, here you have just a week. So there is a huge fair value gap between 85 and 81. And there is also very low volume. That means that there is no structure to contain the price once you lose the area that I wanted to enter. I wanted to enter at 87 because I thought that we could pinch in here and come back, and I didn't want to miss that. And 4-hour daily were shouting that those were areas where we high likely tend to do that. So I hit probably that 10% of chances that we didn't do it. And that's why I still stand the ground, having decided to enter there. That was my plan, and it will be my plan again 100 times. If we come back and we do bar replay and you erase my memory, I will take the same decision probably to enter with low volume there and then to average down below the equilibrium. Now we are in an area that is extremely slippery. We are in an area of fair value gaps and we have already started consuming it. And that's pretty much why I think that the shorts have very high likelihood to fulfill until 80. Not that it stops there. Again, I repeat it. By the weekend, I will like to see the RSI on the weekly holding on 48. I think that's going to give us the biggest likelihood that we can see on the stochastic weekly across. You can see how the weekly support now it's being tested as we talk. That is around 85k. So if basically we dumped to 78 or we go below 78, which is not my forecast, okay, but if we did that against what I think is going to happen, then we can put in our collection of time frame loss, the 4-hour, daily, the weekly, and I'm going to show you the monthly where it is as well, so you get a perspective of what's going on, because this seems to be a small, and it is a small correction of 20 something percent. We can have 30s and 40s in a bull market in a topping year. That is very typical. But in a February, makes me believe that there is something external. Anyways, we'll get there. Fair value gaps. Don't miss this part. This is very important. We have on the 1-hour time frame, and I think on the 4-hour, yes, on the 4-hour as well, CME gaps. The most immediate next to the price is this very thin one at 91.3. This is subject to debate. I'll let you guys do the debating down in the comments, because there is a wick in here that is overlapping right next to that candle. So it's a very thin line really to admit that 91 is a CME gap valid. Okay, I'll give you that, but I'm still gonna mention it. Then we have another fair value gap that I think is legit from 92.8 to 93.6. That is a 1% CME, not the thickest one, which is not great, but let's see where it is on the price on Binance. It should be something between 92.6 and 93.6. 1K there of CME gap that we could potentially use as a wild card, as an insurance to exit if we see too much collapsing in the structure later this week. Make sure that you're subscribed to the channel, to hit the notification bell, particularly so you don't miss the updates in the morning, in the evening, when things are getting heated. I also publish on Twitter, Telegram, and Instagram updates time sensitive, and the summaries of these videos go to Patreon as well, including with my calls whenever I enter, add, or exit on any of the coins. So far, just Bitcoin, but if I enter on any altcoin, I'll let you know as well on Patreon. And this is an interesting news. Bitcoin speculators sent 7 billion to exchanges at a loss in Bitcoin price crash. There is a chart in here that I want to share with you guys. You can see how much it went into exchanges from short-term holders. And if we look at my SOPR indicator, both on Bitcoin and Ethereum, you can see whenever we pinch those areas calculated with statistics, we tend to have a bounce to the upside. Indeed, if we pinch it below and we cross then back over, we get a nice signal in green in here that it's typically giving great performance, even in the bear market. So far, we haven't had the actual signal, but we have tested. Now we are in the process of testing it, clearly because people are closing at a big loss. And the statistics are saying that it's getting very close to being the maximum in the previous hundreds of candles based on a percentile that people can take a loss, and that we should be looking to take advantage of that. And we're getting kind of the same signal around here on Ethereum. Worth noting that the signal on Ethereum in this area in here didn't work that well. In the past, it has worked really great, even in the bear market, but sometimes Ethereum has 1 out of 10 signals that is not as great. The monthly, I promised I was going to cover it. I'm not going to cover the full theory of the linear regression, that we are exiting from 70 and all of that. I'm going to focus that the RSI at the moment is getting very close to our trend line of support of RSI 60 on the monthly. This is the whole bull market where we are, and we have defend that line. When we started the bull market, then we tested that in August 2023. Then we kind of came here to test it intra-candle. It got bought up. We went to 48.7 and then we got bought up to 59. So technically we touched this line, but intra-candle. Then the closing price was way higher. And now we are getting very close to that line, very close. On the monthly, losing a trend line like this, it is not a joke. Let's see how it was in the previous bull market. Test, and pinching it below it. Then we have a dead cat bounce, my typical setup, which is called rally into resistance or revenge rally, that I constantly cover on way shorter time frames than the monthly, but you can see that that is all we did in here, and then we put a new all-time high with that revenge. So on the monthly, we get two options. We bounce off from 60 and we do another move in here up. I'm not gonna tell you yet how high we can go, I don't know, but ideally a rally from holding support somewhere. Worth noting that we haven't tested the final resistance of 78. That will be kind of the hopium scenario at this point in time. And the scenario 2 is that we repeat what we did in 2021, which is to lose the monthly and then later have a rally against that. If we do something like this, not as pronounced, not losing the 50, we never lost the 50 on the monthly in 2021, but you get the point. A rally into the resistance, a revenge rally. That could bring another rally later in 2025 in a similar fashion as in 2021. Where is that support on the monthly? If you haven't asked that yourself, you should have. That is actually 61 RSI, and in the price we have already tested that. We have already touched that level. That is 81.4 to be precise. We have been as low as 82, not 81.5. So as I'm recording the video, we must have done something like that. And that is the monthly support. Now, one of the things that is starting to pick up is the activity in the network. And I suspect that is because there is a lot of people taking their Bitcoin into the exchanges in fear, and that is crossing this purple line in there. Crossing the purple line and coming back above it is a bullish signal. But we cannot just trade that, it's just for your reference. Large holders continue to be in areas of accumulation. We want to know whether they are accumulating at this point or if they are panic selling. I don't see much panic selling except for this peak on the 5th of February when there was a delta of 70K. I don't see much going on in here. we are below the short-term holder realized price, and I have prepared this chart for you to see how many times in the bull market we have done and how long we last below it. That means that the short-term holders are underwater. They are holding positions at a loss, which typically accelerates how they want to get rid of it, get rid of the pain. And that, together with combining it with the SOPR, you can see a period where they just sell at a loss, and that there is nothing that calls more the attention of the market maker for a reversal than to see an extensive amount of short-term holders capitulating. Now, on the ETFs, we have a very similar picture, and things have accelerated as well. Yesterday, we have over 1,000 in inflows. That doubles what we had on the 24, and now definitely this depression is starting to look a lot more pronounced. We went from the highs of 47.80 to now a reading of 37.9, and I suspect that today we may have even a larger one potentially. That is beyond a 6%. I think it's getting to 8% now of a drawdown. The drawdowns around this area are all between 5 to 6%, so this could become a larger drawdown than before. We are at extreme fear 21. Yesterday was 25, and it's definitely the time to be looking for a great entry setup. Long-term holders, no news of them. Just kiri in here. They don't move, they don't sell, they don't buy, they don't do anything. Short-term liquidation levels, you can see that we have taken pretty much everything. If we wanted to go beyond, we have to go way lower. I will really ignore whatever is in here in the short term. I think this is just a glitch on trading different. I will say up until 85, all of these short-term liquidity pools are valid. We are gonna have to stick to what is there in the longer term, because we haven't been at these prices of 80s, 70s and 60s in such a long time. I mean, last year, right? Okay, so we've been talking about these pools of liquidations on the downside and referring to them as 1, 2 and 3. You can see that the 1 is in red with combined with yellow, 2 is yellow with a tiny bit of red at 78. That is kind of the peak, and then 3 is red and yellow. So my entry at 87 was betting on 1. I'm definitely going to consider adding to my position at 2. That is if we take the CME gap or if we enter somewhere in this area. Something I say in the morning, I noticed in the beginning of the video I said we already took 1, and then later in the same video I say there is just this little bit left, which is 85 and 84. Now we have taken everything up until 82.3. There is just that point there of 81.7, and we complete taking all number 1. Number 2, I will say, is all of this. And I will say number 3 is in here, and let's just ignore this point there. I'm gonna save my chart so we can have it for later. If number 2 doesn't hold, we're gonna be focusing on if number 1 doesn't hold, we're gonna be focusing on number 2, and so on. Ideally, we complete 1 and we hold the RSI support on the weekly of 48.49, and maybe possibly we just get into the technical target of the double top on the weekly as well, and we get over with that and we start looking for new highs. But if not, we're going to be focusing on 2, and that's where I'm going to be thinking where to add for that. Liquidations to the upside on the past 30 days, of course, there are incremental ones. We're going to pay attention to them because, as I mentioned, we have a 92.7 to 93.6, and we say that there is this controversial one at 91.3. And that is this liquidity that there is in here. So 91 is somewhere in here, and then the 92.6 to 93.6 is this chunk there. Those are the 2 CME gaps that are overlapping with some liquidations. That makes the case of going to them slightly more attractive. You have 2 sources of liquidity overlapping, attracting the price. Also notice that it's irrelevant if 91 is really valid, because we have a larger one spanning all the way to 93.4. So if that is the valid one and it's attracting the price, then we shouldn't care that much about 91.3, in my humble opinion. In the past 24 hours, there's been again 76% of the liquidations are longs, this time 620, less than half than the beginning of the crash, but once again, most of them on Bybit. The CEO of Bybit claimed that all those liquidations are larger in their exchange because they are very transparent and they are the only ones that report them. We have to say Binance is not a little lamb either, and Bybit was appearing, the CEO was appearing on Twitter saying that those liquidations do not translate into profits. And I think what he was trying to say is that they are not gonna get all that money of liquidations, but he wasn't clear at all, in my opinion. It made it sound like he doesn't really benefit at all from the liquidations, which in case he does, he benefits a lot from liquidations. And the day that there are this sort of liquidations is their pay day, period. I mean, one way that I support this channel is from you guys opening accounts on exchanges and trading. I get a cut of that. And if there are liquidations, I see a spike in referral fees. So I know for a fact that they benefit from that. At least I try to prevent you from getting liquidated, trying to teach you what you need to know to actually be on the other side and stop being damn money and make money together. Anyways, let's look at what's going on in here in the 1 hour. We continue to see high leverage traders. This red indicates that they're using high leverage. Longs are very high at 74. We have never seen that in a long time, so many longs. That tends to act most of the time as a buy signal if the price is coming down. But if the price carries on dumping, those excessive longs can act in the opposite way, creating more liquidations of longs. We have again the green signal in here saying that the bid is at an elevated number. That means that there are tons of orders below the price wanting to enter long. At the moment it's at 0.23. This time that it was 0.23, it pushed the price up but very small at 92. Eventually it could play out because these signals tend to stop the bleeding when you are coming down, and it tends to bounce back up. Of course, not all the time. You need to overlap it with other signals too. The delta of liquidations continues to be above $1 million, and I think that eventually is going to help definitely the price to have some revenge, some dead cat bounce rally at some point. You can see that yesterday on fire charts there was quite a big cash on in here buying 86, but eventually, I'm talking about this morning, they pulled out the support. They did it more or less at 8 a.m., 9 a.m. in UK time. Now that support is not the same in here, definitely not. Now we have a much smaller support with 30 millions in that area instead of the 86, 85, 90s that we have protecting from the crash. Large whales are still not in the mood for buying in here where we are. The next support, I think this is the same one that got pulled out, but this time this is in Binance. And on the lower end at 78k, you can see that they are reducing for the first time in a very long time. They are reducing this buying wall that started on the 9th of January, and it continues to be there up until just 4 hours ago. And it has reduced half from 1.3k to 600. And instead of that, I can tell that probably what they did is to move it to 76.5. Wow, that's interesting. There is a new level as well at 74.5 wanting to buy 1k. So definitely this looks like fishing. I call fishing when they are speculating that the price might get there. That fishing almost 100% of the time never becomes effective. So do not take it as neither the price necessarily is going to come here, neither that if it goes there, this cash on is going to hold. Most of the times they pull out right before impact. And yet, after having gone now to 82.2, price is bouncing to 84.3. And that could be because we are entering an area of value of the net longs shorts delta. If you haven't watched my channel for longer than 2 months, you're probably lost with this indicator. This indicator shows you the amount of longs versus the shorts. And I usually trade it with trend lines. So I look for these channels, and whenever we come back to the same area of trend line, I put put these lines so you can see how this alpha works. Every time we hit one of these trend lines, sometimes we're going up or down. In this case, I have this support from November that got tested 21st of December, then on the 4th of February, and now we are testing it again. And it's a very low value. If you look horizontally, we're at 16K. That is more or less kind of the average of each and every time we put a bubble in red. Now let's look at the price. How is that affecting the price? In September, it was a perfect entry. In October too, here as well, good one, great one. We could say that this is okay. It's going 6% up. Actually it goes way higher, but there are some lows, so it's a mixed bag, that one. And now we're getting this one in here, 26th of February. So whether that is gonna play out or not, it started entering the area of value at actually 88K. Let's see if I place it correctly. Maybe I should move it a little bit more into that area where it pinches the low, and that is still at a price of 87. So I bought when this was pinching, but the price carry on going lower. Now it's just going sideways, so it's staying there in the area of value. That area, I call it the area of look for longs, because this longs versus shorts it won't stay very long in that area of value. Let's look at the fair value gaps. We have a long way to the top now, full of fair value gaps, and that to me is pure fun. So we took the 85, we took that 85 that we took for so many months, 3 months that we've been talking about the 85, we pinch it, we took that one, the fat one, and there is just the 81.4 to be taken. After that, we start another fair value gap, and think about the fair value gaps as areas where you have put on the floor some butter, okay? So if you step on it, you just slip through it and you can even have an accident, right? It's the same with the price. Fair value gaps are attractive to the price because people like butter. I don't know who wants to lick it from the floor, but well, maybe it calls your attention and you walk to it because it looks weird to find butter in the floor. And then once you step on it, you slip through it and you have a huge accident. And that's what Bitcoin is having in here. It entered the 85 and it slipped through it in a single candle pretty much, and it's about to take it all. That is because of the speed that you can see there. There is speed in here as well, starting from 80 all the way to 76A95. Now to the upside, this is the fun part. Once you position yourself and you DCA your long, then now we need to speculate how high are we gonna get? Are we gonna take up until 95? Are we gonna take the CME gap of 91 or the one at 93, which is in the middle of this fat one, which I think is going to be attractive at some point. Now let's look at what's going on with the general markets, because to me what crypto is doing at the moment is not scary as long as the general markets doesn't do something really scary. And I've been saying that for a very long time, particularly if you've been watching my videos about the VIX, you know what I'm talking about. And now we're gonna cover general markets. I promise it's going to be relevant for crypto. DXY, the dollar index needs to break the support at 106 at the moment, is right there at the support. We don't want the dollar index to start pushing higher. That is the situation. We have a head and shoulders. The target was that the DXY should go to 42. I believe that can take the DXY into 104.4 at the moment. That will be beautiful because it brings the dollar index back inside the symmetrical triangle. Dollar at least has stopped pushing higher. It has fulfilled the target of 77 that we talked about months ago. It can still rally to 3.1K if it tests the full target of 83 on the RSI. VIX, luckily for us, it's still within this channel. If it exits from the top of the channel and it creates a spike as intense as going into 90, we are done. Not just Bitcoin, but the altcoins, everything, all risk on assets, S&P, everything gets completely slammer if we get to something like this. Why I'm pointing at that number? Because COVID was 85. We already did that pinch into 65. That was quite scary. And to me, that is just the beginning of a potential crash. And I'm not calling for the crash to be right now, okay? I just don't want it to happen right now, because if it happens right now, the bleeding of Bitcoin is no longer gonna respect anything. It could crash a lot lower. I think the crash, in my opinion, can happen at some point in 2025 to 2026 early. That's where I place that line. I think it can happen in this range. Between March 2025 to May 2026 is where we should be getting a huge crash in general markets. So the fact that we are now still being held there, it means that it hasn't started yet. But what could spoil that? Well, at the moment we have the Nasdaq. When I started the video, it was testing 52. If it breaks below this, it could call for a crash on Nasdaq. If it holds this week like this, it could do a rally into the next resistance and things could improve. And then that will definitely help for Bitcoin to recover. But if Nasdaq breaks this, then we are going to get a lot more bleeding in Bitcoin. That's how we can get into number 2 or number 3. The S&P doesn't seem to care about all of this going on at the moment. It is just literally having a correction of 3% from the all-time high. That is just routine, and you can see that there are even larger corrections on the way of this parabolic move. It is the Russell 200, the one that is together with the Nasdaq keeping me looking at general markets. Why? Because the Russell 200 is more risky than the S&P, and it has put this head and shoulders, and at the moment is losing the neckline. The full target of the Russell in here is quite low. Let me show to you. I'm gonna save it. That is 1.9k from where we are, which is 2.1. That is a correction on the Russell of 13%. So for stocks and for the Russell, that is something routine. You can see in here multiple corrections of 18%. It's a little bit more volatile as well. The guy that has me worried at the moment is this rolling over. Just by looking at this chart, immediately I travel back in time and I feel like I'm in 2021 trading Bitcoin in April. This looks more or less the same to me. There are these corrections that start becoming more pronounced, then you get the rolling over, and eventually you get to this point of inflection, which is when you're still at the highs and people are still pumped by the parabolic move, and no one wants to admit that this could turn into a lower high, that could turn later into an upcoming lower low relative to this. And at that point, you get the full change of structure. That's where you start talking about, damn it. And at that point, you get just a peak like this that tests resistance, and then you can have a full correction. If we get liquidity to continue and we don't get an AI bubble popping right now, we should be seeing Nvidia continuing to the upside. Even a rally into this resistance will put on Nvidia a new all-time high. That should delay a potential bubble popping. I still think that eventually Nvidia is gonna pop together with all AI. That is just my finger in the air theory. But the correction that we are having in crypto definitely is being influenced by what's going on with the stocks. We have Google correcting, Apple correcting, Nvidia had a recovery rally in here, but now it's got these 2 weeks where it's struggling to put a new higher high. Amazon as well with this top formation with bearish divergence with the support of 215 threatening to correct somewhere around $188. Tesla doing terrible, already fulfilled my target of the hive of $300 and even going beyond to $290. You can see that we call out for the breakout in here. We say that all we can have is a rally into this resistance, but actually we carry on going lower. Palantir as well is having a decent correction in here. So that is 31% down. So there's no questions of why really Bitcoin and crypto is doing this. And I think so far, none of these stocks have done anything extremely significant to get us into number 2 or 3. But if they carry on in this direction and they stretch it too much, that could potentially lead into an expansion of the volatility index. And that's why I'm looking at this breakout on the volatility index, this double bottom, and that potential for this to create an expansive move like in this fashion. You have higher lows, you have a double bottom calling for continuation for upside trading here. So all eyes on general markets, because there's literally nothing wrong with Bitcoin. There's nothing wrong with crypto, but general markets have the last word. And if they say now is the time to get a big correction, crypto has no way of preventing it. Guys, I hope you appreciate the extensive video with all the information to keep you informed. I hope that you are not in a large position on a long and that you took it with low volume like me. If I see general markets doing something big, of course, my next DCA order is going to definitely get pushed as low as I can, right? To average down and eventually get me out of there doing TA. Make sure that you're subscribed to keep you informed of whatever I decide if it happens. Guys, if you want to trade, if you want to short, if you want to enter in a better position than me, you can do it on OKX. OKX is offering 60,000 in rewards if you use the links in the description. By using that link, you get the lowest fees to trade. I got a new partner, BitUnix. Whatever you deposit or you trade, you pretty much guaranteed to get some bonuses. And that is the great thing, together with not necessarily needing KYC. This is a non-KYC exchange that, together with bluffing, are now my alternatives that I'm using for non-KYC. That means not needing to use a VPN, no waiting for KYC to get approved or rejections, and being able to use as many accounts as you want with different emails. Thanks so much for watching. Appreciate your company listening throughout this whole video. Let me know what you really think is going to happen with the market. Tomorrow morning, I'll read all your comments. Thanks so much for watching. I'll see you tomorrow. Bye-bye.